Hello Rich Insiders, welcome back to our channel. If you're new here, consider subscribing so that you don't miss our latest updates. As we navigate the potential recession and economic downturns of this year, characterized by global geopolitical challenges and cost of living crisis, combined with a notorious real estate market crash in several countries, it is wise to look for uncommon assets. Historically, luxury watches have been seen as a status symbol, making the elite's own custom-designed luxury watches. But in today's day and age, especially during periods of recession, investors are seeking safe havens. Luxury watches, with their craftsmanship, limited availability, and high demand, stand out as resilient investments. In fact, Bernard Arnault, the CEO and chairman of LVMH, the world's largest luxury goods company, is currently the richest man in the world. With a net worth estimated at $230 billion, Arnault has surpassed Elon Musk, who has now secured the second position among the world's wealthiest individuals. In 2023, LVMH's jewelry and watch division achieved sales of $11.8 billion, marking a 7% increase in organic growth. The luxury conglomerate now boasts 10 watch brands, which include renowned names like Tag Heuer, Hublot, and Zenith. Additionally, LVMH's portfolio encompasses esteemed fashion and jewelry brands such as Louis Vuitton, Bulgari, and Dior, which also offer watch collections. But how did luxury watches transform from a symbol of wealth to an investment option? Are luxury watches the new store of value while offering a sense of success? Join us as we explore why luxury watches continue to shine, even in the face of economic turbulence. Whether you are a luxury enthusiast or someone planning to make a quick profit, there could be no better purchase than the limited editions of these watches. Last year alone, Swiss watch exports surged to a record high, reaching $46.4 billion. Leading the pack was Rolex, the sponsor of the Melbourne Grand Prix, producing 1.24 million timepieces and achieving sales of $17.6 billion. In the same industry, LVMH reported sales of $18 billion for the previous year in its watch and jewelry division. But let's go back a bit in time. There is a fascinating history behind luxury watches, which have evolved from simple timekeeping devices to symbols of status and wealth. Our journey begins in the 17th century, when watches transitioned from pocket-sized curiosities to wrist-worn essentials. Blancpain is the oldest registered watch brand in the world, established in 1735 in Switzerland. The intricate craftsmanship and precision that went into these early timepieces laid the foundation for what would become the luxury watch industry. The dawn of the 20th century saw the birth of luxury watch brands that are revered even today. Brands like Rolex, Patek Philippe, and Audemars Piguet, each with their distinctive style and heritage, began to shape the world of horology. Their meticulous attention to detail, from the inner workings of the watch to the exterior design, set them apart in a league of their own. These brands didn't just sell watches, they sold a dream. A luxury watch became a symbol of success, a testament to one's achievements. It was no longer about merely telling the time, it was about making a statement. But what truly fueled the rise of the luxury watch market was the growing appreciation for these finely crafted timepieces. For Switzerland, the watch industry holds significant economic importance, ranking as the third largest export sector and providing employment for approximately 60,000 individuals. Collectors and enthusiasts began to recognize the artistry, the mechanical genius, and the sheer effort that went into creating each watch. This appreciation turned into a demand, and the luxury watch market began to flourish. By the turn of the 21st century, luxury watches had firmly established themselves as desirable and valuable commodities. The industry had seen its fair share of ups and downs, but through it all, luxury watches remained resilient. They weathered economic downturns and changing fashion trends, all the while maintaining their allure and appeal. As these timepieces gained popularity, they became more than just watches. They became a statement, a symbol of success. This evolution from practical tool to coveted status symbol is what makes the story of luxury watches so captivating. The resilience of luxury watches is not merely a subjective observation. The numbers speak for themselves. The luxury brands market has remained robust despite economic fluctuations. Global sales figures for these exquisite timepieces indicate an upswing. According to a recent study published by Deloitte and Credit Suisse, Handbags and watches fall into that category and can be classified as store-of-value assets with low risk, low volatility, and mid-single-digit returns. Rolex watches have delivered an annual return of 33% in 2021, while Chanel handbags rose by 25%. The study also highlights a low correlation between luxury handbags, watches, and traditional asset classes such as bonds and equity, suggesting a good diversification strategy. From the stylish streets of Paris to the bustling metropolises of Tokyo and New York, consumer demand for luxury watches and handbags is increasing, both for primary and secondary markets. Trends in the luxury watch market reveal a fascinating shift in consumer preferences. While classic models remain popular, there's a growing interest in limited edition watches and vintage pieces. Consumer demand is so high that brands need to come up with new ways to cope with this sudden surge. Chanel, for instance, has implemented quotas to limit the number of handbags customers can purchase per year. This approach bears similarities to Hermes, where wait times for bag offerings can extend to years. These trends speak volumes about the evolving tastes of consumers who are increasingly seeking uniqueness and exclusivity in their timepieces. Emerging markets too play a significant role in the industry's resilience. The appetite for luxury watches in regions like Asia and the Middle East has surged in recent years, contributing to the industry's overall growth. Economic cycles, of course, impact all industries. Yet the luxury watch industry has shown a remarkable ability to weather these cycles. During periods of economic growth, sales of luxury watches increase significantly. However, even in times of economic instability, the industry maintains a steady pace. Why? Because luxury watches are more than just accessories. They're investment assets, commodities, and symbols of success. Despite the occasional downturn, the luxury watch industry has remained largely unscathed thanks to a combination of factors. These include the enduring appeal of luxury watches, shifts in consumer preferences, the emergence of new brands, and the industry's ability to adapt to changing economic conditions. Even Bulgari's CEO confirmed that the high-end has been one of their main drivers of growth. For instance, Bulgari's coveted yellow gold Serpenti secret watches sold for a whopping $350,000. But who can afford these expensive watches? The Chinese stand out as the primary customers for European luxury brands. High-spending Chinese consumers played a crucial role in sustaining the sector's resilience in the previous year. Additionally, data from Morgan Stanley indicates that Chinese consumers contributed to approximately 60% of the total industry growth between 2000 and 2019. Chinese shoppers often take advantage of lower prices in Europe, where luxury items are typically priced around 30% lower compared to China, depending on the brand. This is the reason why a significant portion, 2/3 of Chinese consumers' luxury spending occurred outside of China. Western luxury markets heavily rely on the Eastern wealthy shoppers to keep their stores open and profitable. What makes luxury watches so resilient, and do they even hold a decent investment potential? While the luxury market experienced corrections following the pandemic, the long-term trajectory points upwards. Brands are expanding their offerings, acknowledging the evolving demands of collectors. This expansion extends beyond just sizes, marking the end of the dominance of sports watches. Collectors are exploring various corners of the collecting world, rediscovering diverse styles beyond traditional brands like Cartier or Piaget. This trend of broadening tastes is expected to persist into 2024. There is a growing interest in watches, with a significantly larger audience compared to 2020 or 2014 approaching timepieces from diverse perspectives. Also, the average age of watch bidders on the secondary market has gone down from 57 to 50. This clearly states that a young population is attracted to this market for a myriad of factors, as we discussed. Luxury watches have demonstrated an ability to retain and often appreciate value over time. This is particularly true for rare models or those associated with significant historical events or personalities. Think of Paul Newman's Rolex Daytona, which fetched a staggering $17.8 million at auction. This potential for appreciation makes luxury watches attractive to investors who view them as tangible assets that can provide a return on investment. These watches also carry a sentimental value that transcends their monetary worth. In essence, the allure of luxury watches lies in their fusion of art, investment, and emotion. They are not mere time-telling devices. They are works of art, wearable symbols of sophistication and status. This multifaceted appeal has enabled them to weather economic downturns and maintain their allure even in the face of shifting consumer trends. How does the future look? Sales of luxury watches worldwide are projected to reach approximately $30 billion this year, as reported by market research firm IMARK Group. Forecasts suggest a further increase to over $37 billion by 2032, driven by rising global wealth and the growing interest of Gen Z and millennials in high-end mechanical timepieces. LVMH, for instance, is intensifying efforts to capture a larger share of the global luxury watch market, as evidenced by the establishment of a new watch division and the introduction of a range of premium-priced models. In a recent development, the company appointed Frédéric Arnault, the 29-year-old son of LVMH chairman and CEO Bernard Arnault, as the CEO of LVMH Watches. This division encompasses prestigious brands such as Tag Heuer, Hublot and Zenith. Overall, the future of the primary luxury watches market looks bright. The luxury watch market has evolved over the years, adapting to changing consumer preferences and economic conditions. Despite changes in trends, the demand for luxury watches has remained strong, driven by a growing appreciation for their craftsmanship, heritage, and investment potential. The world of luxury watches is not just about timekeeping, but about the art of time, the sophistication of design, and the prestige of ownership. Each watch carries with it the legacy of its brand, reflecting the values and philosophy that have shaped its creation. All these factors help them retain their value over time, often appreciating, making them a sound investment. They are a symbol of success, a testament to craftsmanship, and a piece of art that tells a story. So are you into the world of luxury watches? Do you see them not just as accessories, but as timeless investments that can appreciate over time? Let us know your thoughts in the comments section. We'd love to hear from you. Thank you for watching until the end. And don't forget to subscribe for more on luxury lifestyle, global economies, and the finer things in life. Until next time, take care.